Welcome to the weekly Crypto Check-In, your go-to podcast for navigating the wild world of cryptocurrency, hosted by Robert Swarthout and Andres Sandate. Today, recorded on December the 3rd, we're diving into the latest crypto market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good, Robert. I just got back into Atlanta. I was away for the holidays and for a family funeral, and so got back in today. Followed what's happening in crypto and just more broadly in the markets. So good to be back on the air, and hopefully you've been well and had a good holiday.
I did. We were at home, which was nice. We were originally supposed to go out of town, but that got changed, and then we were at home and kind of this wonky weather here in Atlanta, 10 to 15 degrees cooler than normal is. I'm ready for the warmer temps to come back for a bit if we can get them. So,
yeah. Well, I'd say a lot of people in crypto and digital assets are probably wishing we were not in what feels like a little bit of a crypto thaw or crypto winter, as they call it in the industry. So we'll cover that today. But I know you've got the second, the second one. There we go. So we're going to start off with the FDIC. I thought this was interesting. I know everybody wants to probably hear us talk about what's going on in crypto and what's going on with strategy, which we'll get to later. But let's start off with this FDIC headline.
Yeah, this is certainly not the sexiest headline, but so in 2025, earlier in the year, we got the Genius Act passed. That was legislation around stablecoins, how they can be constructed, who gets to keep the interest, who cannot get the interest. We've gone through this many times, but so that's all cruising along. So the FDIC basically said that they will soon be giving guidance around tokenized deposits, or just kind of like what money's going to look like in this digital currency world when it comes to cash, which obviously is near and dear to their heart. So it's cool. I mean, I kind of didn't expect this to be coming, but at the same point, it makes total sense that it's here. It's one of the things you don't really think. I don't spend too much time thinking about the FDIC personally, but it's it's a fundamental building block of where this is all going, having tokenized deposits and what that means. The part that I get excited about around this is it helps give, to me, transparency over time to the system, because it's going to be on a public ledger. And in theory, like when you go back to the financial crisis, everything was very opaque. You didn't know who owed what to who and all this good stuff without actually seeing the contracts. Well, here, this would be on a blockchain, and you can kind of be able to see maybe a bit of a digital trail. So,
yeah. And, one thing that I doing some research on this one that I guess I thought stuck out was the fact that it's this shift in approach, right? So now it's about the risk management that the institution can put in place to ensure effectively that they can participate and want to participate and protect consumers, versus a permission-based approach, which prevented a lot of institutions from being willing even to invest in the resources, the people, the technology, all the testing. So I think this does, removing this like pre-approval approach should hopefully, just from a posture standpoint, clarify a lot of things for banks and their leadership teams, if you will, to put in place a lot of the the rails to really get digital money moving.
Right. It's for the most part, Americans don't think about money not working, right? It generally works consistently. Every time you go to do tap to pay or a credit card or debit card, it works. But even, there's things like efficiencies that can come along with tokenized deposits. I actually did a wire today from one account to another account that I have, and I was actually impressed. The domestic wire system was about an hour, when it happened all obviously in the same business day. So, an hour seems fast in ancient terms. In crypto, it seems like forever. So we'll see kind of how those kind of shift over time. So,
yeah, I mean, I think that this Genius Act, right? That the proposals that are sort of working their way through Congress, hopefully we'll see things start to come together. I did a lot of, I guess, research over the last, week and a half just to see, is the bill, I'm going to say dead, is it stalled, and is it indefinitely or is it not? but it's good to see there's these regulators doing things in the background, because now that the legislation is at least past the House, gotten out of the House and is in the Senate, hopefully the regulatory bodies continue to work in the background, and optimistically it comes together over the next month or two.
Yeah, I'm optimistic to your point that it will happen. The government shutdown did not help anything in that regards. It definitely took some wind out of the sails there, but I think it'll get kicked back into gear probably after the first of the year, be my guess. So we will see. So we'll move on to our second topic. So we're talking about Georgia, and not the state. We're talking about the country here. Is rolling out the use of Hedera. So Hedera is another L1 blockchain. The ticker for that token on that blockchain is HBAR. But the use case here is the country is going to use it for basically, well, they've signed a memorandum of understanding, so it's not fully happening yet, but basically to include land registries, national records, and some smart contract services for the government. But I think the big point here is it's going to be for the, like basically property deeds for all intents and purposes. I don't know if they call them that there, but that's what we would refer to them at here at home. So it's cool.
Yeah, I mean, yeah, government-wide adoption. We've talked about this now for probably a couple of years, even prior to us launching this weekly crypto check-in, that we felt like this was an opportunity where you'd see real estate transactions move onto the blockchain, and it was just a matter of, the potential of it. Would it get realized, and where? And we've talked about the competitive dynamics in the U.S. and some of the challenges I think that crypto's had in being adopted from government institutions and enterprises. You're seeing that, small country of Georgia is stepping out. No surprise. I think a lot of people will be watching to see how it goes. And certainly from a policy standpoint, there's a lot more auditability, and there's a lot more, you would think cost savings and efficiencies here than traditional systems and all the costs associated with it, doing it, the more traditional way.
100%. So maybe put some numbers around this to give some context. This is a big deal, but it's still a small deal at the same point. So Georgia, the country, manages more than 3.5 million property records. The real estate market in the country is valued at 16 to 20 billion. So, we have metro areas in the U.S. that are worth more than that. Just to give perspective. Even if only 1% of it was tokenized, which it sounds like all of it will be, but 1%, so 160 to 200 million would be on Hedera in that case. And an interesting number is McKinsey has estimated by 2030, so call it 5 years from now, the global real estate tokenization on chain of real estate will be 5 to 7 trillion. This is not even a drop in the bucket at this point. We're a long ways off, but I imagine it's going to come pretty heavy and fast when it does. So.
Yeah, I mean, you're seeing the impact AI is having on, the real estate sector from the standpoint of just everyday things like underwriting and modeling, et cetera. And you have to think from the standpoint of property records, all the paperwork, I guess, is the simple way to say it. Like all the paperwork and auditability and all the systems that go into tracking real estate transactions and ownership, et cetera, transfer of ownership. I mean, all that stuff is ripe for me to move on chain. So this is neat. That's a cool headline.
Yep. Awesome. Well, our third topic is it's kind of a bit of a snippet. We don't have tons to talk about here, but so Bank of America is projecting that clients that want to do crypto in managed portfolios by Bank of America are going to be in a 1 to 4% allocation of digital assets. What is not clear is whether it's going to be just ETFs or if they're going to start doing tokens directly. My guess is it's more ETFs to begin with, and maybe over time they would allow some direct ownership. But it's cool to kind of see these big institutions starting to talk about it more, because it had kind of gotten quiet on this front. You hadn't heard too much about it. Now it seems to be, at least in Bank of America's case, kind of coming back up. So.
Yeah, I mean, from a advisor, retail investor standpoint, right? The headlines the last few weeks, and especially in recent days, with all the volatility and all the discussion about global macro policy and what the Fed's going to do, and what what's going to happen with interest rates. It's certainly had an impact on risk assets, including digital assets, crypto, Bitcoin, etc.
Hmm.
These kinds of pronouncements from these major institutions are months in the making. So, a lot of people might be looking at this headline and saying, well, why would anybody, have a 1 to 4% allocation to crypto, and Bitcoin's down, touched the low 80s after being at a, high of 115, 120.
Right.
But the whole notion of asset allocation, when you talk about individuals and talk about investing and even all the way up through large institutions, I mean, the notion that you're going to time the market is really foreign to how people manage, capital, if you will, from the standpoint of these big institutions. I mean, they're asset allocating, and there's a model put together, and so they're setting this model at 1 to 4%. But I think it comes down to, right, ultimately the client's going to have like some longer term horizon, and they're going to have to accept the volatility that comes with crypto, at least in the near term, because it is a volatile asset class. But it does feel like it's in line with kind of where a lot of the other institutions have sort of pegged crypto exposure at 1 to 4%.
Mhm.
I haven't seen anybody come out and say 5 to 10.
Right.
So it feels like 1, 2, 3% is kind of the standard in the industry right now.
Yeah, it's I don't have perfect data to back this up, but the times you start to hear about bigger percentage of allocations is when the prices are up.
Yeah.
Probably not the right time.
Yeah. Right.
And these smaller numbers are when prices are low. Maybe they should invert those two.
Yeah.
But the part that I didn't share about this is, so this is not just Bank of America direct. It's through their Merrill, their private bank through Merrill portion of it.
Yeah.
And this will start in January. And initially it's just Bitcoin ETFs, which just seems absolutely silly to me. You could, at a minimum, you could throw Ethereum, and now there's even altcoins. There's XRP, there's Hedera, there's a Doge one out there. So it seems a little bit short-sighted, but I'm sure it'll change over time. So
yeah, you'd think that as I guess the research teams begin to understand some of the other technologies and some of the use cases of some of the other tokens, that I guess the recommendation set would broaden. This is kind of like saying you can invest in a chip company, but you can only invest in one chip company.
Correct.
Or you can invest in one utility company, but not have exposure to 8 or 10 different publicly traded utility companies. It's kind of the way I think about it. So hopefully it will expand over time, just for the sake of the industry, and it should bring some fresh capital, at a time when there has been a lot of profit taking, and there has been a lot of folks that had leverage bets on that they've had wiped out. So fresh capital into this space would help at any given time, but certainly in a period like we're in here, and we've been in the last few weeks.
Yeah. Well, that's probably a very good segue to our next topic. So strategy, or formerly known as MicroStrategy, the headline here says, is strategy in trouble? It's more of posing a question we don't necessarily know the perfect answer to, but so some things that we do know about strategy, right? They are the single biggest holder of Bitcoin in the world outside of Satoshi. So they have just over 650,000 Bitcoin that they hold today. It's worth $55.9 billion, or give or take. Obviously, Bitcoin's always changing. The interesting thing here is the market currently values MicroStrategy, the equity market currently values them at 45.7. So you have a delta of roughly $10 billion that the market is valuing. I don't know. It's interesting scenario.
Yeah, the stock's worth less than the assets on the balance sheet.
Right. And an asset that is very liquid. It's not like they hold stock in some other company and you don't know how that's valued. This is pretty interesting to kind of see how it's playing out. So in some sense, this topic can be looped into what would be our sixth topic, crypto market, since October the 10th, because MicroStrategy is down, and they're down a lot this year. Particularly over the last, since October the 6th, they're down 57%. That's a huge drop in a share price in basically a 2-month period.
Yeah.
And what used to be a premium is now you're getting it at a discount if you're buying MicroStrategy for the Bitcoin. And it's just a crazy world we live in. Their average cost basis for all their Bitcoin is 74,000 and change. So they're above that. Bitcoin's trading at 93 today. A week ago, Bitcoin was in the mid to low 80s. I don't know if they were getting nervous yet, but that margin of error got really small there pretty quickly. So,
and yeah, they went out and raised some fresh capital.
correct. Yeah,
Strategy did, the company. They raised about $1.5 billion here in the last week or so.
Yeah, yep, exactly.
Amidst the holidays, when
no one's paying attention.
Yeah, I was going to say when people are, I guess they're still focused on what's happening in the markets, but there's holidays, there's trading shifts around a little bit. Trading hours are different. They raised $1.5 billion, giving them, somewhat of a additional war chest in the event that Bitcoin prices continue to fall. But what the CEO, not Michael Saylor, came out and said, I don't know if the market was spooked by those comments, because he said, we would have this capital available in the event that Bitcoin prices fall, right? Well, because they are the largest holder outside of Satoshi, it sort of created this loop. At least the market reacted,
Right.
the market was spooked and the price fell further. So yeah, it's tenuous right now, right? There was a lot of products created around the strategy stock, right? You also had indexes that had to shift around their components, meaning the S&P indexes, because the market cap just exploded there for a while earlier this year, and they had to add it to the index, right? So you now had this extremely volatile stock in the index, which is really tied just to the underlying Bitcoin. And now a lot of those same indexes, are they not revisiting whether or not this whole company is, if you will, a traditional company or a stock, or it's a fund holding, or it's a fund. So there's a lot to still unpack, I think.
Yeah. So on top of this, so kind of looping back real quick, the $1.5 billion they raised, they're setting to the side as a cash reserve. So they have roughly, I think, 23 months cash on hand to be able to pay the preferred dividend on a different share class that they've sold. It seems like a messy situation that, unless Bitcoin really recovers, it potentially only gets worse over time for them. So, I don't generally cheer for companies to go out of business or have trouble, but this one, to me, has been toxic for the crypto industry. There's Bitcoin proponents are going to say the exact opposite, but it's interesting to kind of see the beginnings of what I thought might happen actually happen here. So, anyways,
well, yeah, one thing I will be watching, I guess, here, there are now enough institutional investors, large global asset managers, governments, and now you would even argue, the president, that are all tied into crypto. They're all tied in now, much deeper. You just look at the headlines we talked about, right? So, if you go back and look at what happened to, long-term capital management, right? Different situation, but you had a highly leveraged fund that ended up having to get bailed out in order to sort of save the financial system. That was the argument, right? So you had all these banks that had to come together and agree to sort of bail out long-term capital management because they had these leveraged positions on. And I'm going to think that there has to be some, let's say, higher powers that are paying attention, right? Regulators, larger stakeholders, if you will, beyond shareholders, that are watching this just to see just what kind of trouble this company could get in if, in fact, Bitcoin were to nosedive, right? So it's tested the 80s. I think it was at 83,000. Said today it's back up above 90, but certainly, it's tenuous, like I said.
Right, and heck, it jumped, I think, roughly 8 to 10%. Was it yesterday or the day before? Just on the suspicion of news that Trump had picked his new Fed chair, and the assumption his rates are coming down and more money in the system. So, it's complicated.
Yeah.
So, We're going to jump to our sixth topic and come back to our fifth one because I think we'll kind of stay on topic by doing that.
Okay.
So the crypto market since October the 10th has been nothing to write home about. It's been pretty crappy.
Volatile and crappy. Yeah.
Volatile to the downside. There's no volatile to the upside in this
That's right.
story.
Yeah.
And for the longest time, it just felt different than other sell-offs because it just felt so consistent. Other sell-offs, you might have a recovery day, right? This was just day after day, or maybe if anything, it took a breather and didn't do anything, and then it went down the third day. But then somebody made a post that I found rather interesting. So MicroStrategy, kind of looping that back in here, is probably would probably coin themselves as a DAT, a digital asset treasury company, more than anything else. There's ones popping up that are doing SPAC transactions so they can go public. There's one for XRP that recently happened. So they're becoming more and more, or just generally traded companies are putting digital assets on their balance sheet. So they're kind of this blend or this weird combination of companies. Nevertheless, so the group, let me get their name right. It is the MSCI, the world's second biggest index company.
Yeah.
Basically came out and questioned whether companies that hold crypto assets as their core business should be considered companies or funds. I think it's a fair question. I would, off the cuff, I would say if you think you're a DAT, you're probably a fund. You're not a company. But that's my opinion, and probably worth the 2 cents or maybe even less. But at the end of the day, what happened here was this was on October the 10th. They came out with this announcement that began the sell-off that we've experienced for basically the last 2 months.
Yeah.
And it looked like, if you want to say it, smart money saw maybe the writing on the wall and was like, this is not going to go well, at least in the short term. And they got out of it. That's why MicroStrategy is down a bunch, 57%. Since then, and other, the crypto prices have followed, largely Bitcoin, and then the rest of crypto just follows Bitcoin. But it's been a not very exciting last 2 months. So.
Yeah, there's a lot of there's a lot of downside volatility. We've seen, I mentioned it earlier, there's been a lot of leverage bets that have been blown out, and so you've seen some steady inflows of ETFs, but there hasn't been this resurgence of, I'd say, massive flows into ETFs like there were earlier in the year, certainly spring and summer. You can't deny the fact that there's more of a risk off posture positioning, just generally, from the standpoint of more risky assets, and I think some of that is tied into uncertainty around earnings, with the market largely dominated by a handful of just big tech companies, AI exposure. There was a lot of headlines the last 2 weeks about, is the AI boom over? And even though earnings for Nvidia and some of the other big tech companies held up, I think a lot of that is you put it all together,
Sure.
and it just leads to a lot of uncertainty. And if you're thinking about, where do I park money, people's first place is maybe not as much exposure into the riskiest assets out there.
Correct.
It's maybe into things like dividend paying stocks and let's call it quote unquote safe havens. All to say, is this a buy the dip type of scenario? Because we could have regulation on the horizon. We could have, if you look at some of these headlines, you could have, this more secular shift happening. That's a multi-year, more multi-decade long kind of expansion of digital assets and crypto. It's a tough, place for, I'd say, an individual investor or an advisor to sort of try to navigate, because they want to look smart to their client. They want to look like they didn't put their client into something that, even if it's a long-term hold, psychology would suggest that people are going to call the broker tomorrow and they're going to say to he or she, hey, what are you doing here?
Right.
You just lost me 10%. So there's a lot to contend with. And I guess I'd ask you, because you've been through multiple cycles, just to kind of go one step further, what's your take overall? Is this a crypto thawing, a crypto winter? and how does it line up with like prior cycles?
It's a great question. The lining up with prior cycles, I think that narrative is starting to break. For better, for worse, we'll find out as history goes on here. But the what I think is happening is the market gets so excited about the stablecoin legislation that moved along. We were kind of full steam ahead with when it came to the market structure bill. Obviously, that hasn't happened yet, and it's taken a lot longer than I think even the medium hopeful people would think. Again, the government shutdown did not help. I think we're kind of in this holding pattern, albeit a bit of a downward one, that feels like a small little bear market cycle. I don't think it's fully blown. I don't describe it as a bear market cycle, but I think I use those words to illustrate it. And I think that, we're unlikely to finish this year in a super positive way, at least sentiment wise. But I think the first quarter or first half of next year, things could get back on track and be more exciting. So if anything, it's just kind of maybe a timeout of sorts. So
yeah, makes sense. Yeah. Well, certainly a lot to cover, and I'm sure we'll do at least one more, update in December. So, the way these things go from week to week, you're a couple of headlines or a couple of announcements away from sentiment shifting.
Yeah, I mean, there's some, I guess, that may seem crazy ideas floating around out there, but like, with this administration, and like what's actually off the table, I don't know. But like, there's a rumor, speculation that because it had come up in the past, it's kind of bubbled back up this last week that maybe the Trump administration would push for no capital gains taxes on crypto. I don't think that would get across the finish line, but is some form of it get across the finish line? Maybe. I don't know. But again, that's one of those things that can send the market up 5 or 10% in an hour, and then we kind of bleed down 15% the next 2 days. So,
yeah. Well, and I think this is also, my last comment on this crypto, sort of performance or crypto market since late fall would be, there's a lot of other debate happening around the health of the U.S. economy, and even just looking at retail spending, for the holiday season, right? That is a much bigger topic, a much bigger headline than say what's happening necessarily in crypto. I know that we are a crypto focused
Sure.
news update show, but to think that crypto isn't going to be tied into what's happening in the broader economy,
right? Yeah, it's not.
It's going to be tied in, and I think there's still a pretty healthy debate about how healthy is the economy, right? And there's a lot of questions out there about data, and is the data that we're going to see here reliable because of the shutdown? And so all those types of things have to play out, and we have to kind of see how's the U.S. consumer doing, what's the sentiment of the consumer. Obviously, the Fed's watching, jobs, and they're watching, that unemployment rate and trying to determine, right, how healthy is our economy. And that's going to dictate a lot of probably the near term, meeting the next month to 90 days of what happens in crypto.
Yep. Could not agree more. So we're going to jump back to our fifth topic here. So this should be pretty quick. Singapore has expanded Ripple's license that they had to be able to do payments in the region, basically enabling them to do end-to-end fully licensed payment services in and out of the country. Before it was a little bit more restrictive. Now it sounds like it's like off to the races. I think you're going to see a lot more of this in 2026. A lot of these, some of these companies that have had licenses around the world have been in this, I guess, we didn't even call it trial period, but like they had a minimal license, and now starting to see some of these licenses get broadened, and countries be able to fully utilize the benefits of this stuff is cool to see. So
yeah, it's just one of the things that we've talked about, just the competitiveness. Some of the countries are really wanting to be out there and ahead, and the U.S., just to pick on us a little bit, like we're still trying to kind of get our house in order. We're a much bigger economy. There's there's a lot of competing interests, but there's something to to look at here, and
Yep.
I guess be kind of wishful in the sense of, you look
Correct.
at these countries and they kind of get their act together and they get moving.
Mhm.
Hopefully we'll see some of that sort of behavior and motivation from our legislators and regulators over the next month or two.
Yep. Fingers crossed. Cool. Well, our last two topics basically are the same bucket. So two different companies, Kraken and Grayscale, have both filed to go public. They're still in the, I guess, paperwork stage of this. No one is actually trading yet. And my guess is maybe not even in December. I don't know if December is a good time to do this or bad time to do this. It feels like an odd time to me because people are not paying attention as much. Um,
Yeah.
but and again, it's with the current pricing that we've seen the last 60 days of especially in Kraken's case, right? I mean, they're an exchange. When the prices are down, there's a lot less trading, so they have a lot less fees coming through the door for them.
Yeah.
Seems like
Yeah.
an oddly weird time to choose to do this. So
Yeah, I agree. I don't see these happening in the current crypto environment. So I think it's going to come down to, the bankers and lawyers are going to probably tell the CEOs and boards of these companies, it's, you would not be received as well if you were to
right.
go out now. You could probably raise some money, but it'd be much better for you to wait until there's a little bit more clarity. So yeah, I agree with
Yeah.
you.
And again, I don't think they're having to wait long. I mean, like even on the long side, 6 months. Like
Yeah.
I don't
Yeah.
think it's long. It's Grayscale obviously is not in the exchange business. They're in the product business where they
Right.
sell these ETFs and trust products. So um, we'll have to see how it all goes. But it's cool. At least the IPO flywheel is at least somewhat spinning. And for a while, it was really spinning with crypto, and I think we'll see it kind of catch back up and get into gear in the first quarter to first half of next year. So
Yeah, I mean, these are not things you can make happen in a matter of days and weeks. These are months and quarters long events with the filings and requirements and roadshows, et cetera. So I think they end up, going public. It's just a matter of, timing it. You want to have the best, IPO, performance that you can. So
yeah,
you've built this business up over many years. It seemed kind of silly to rush out at a bad time.
yeah, could not agree more. Well, that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated with the current crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In in your favorite podcast platform. Leave us a review or share your thoughts, or like our Teton Crypto Capital LinkedIn page for more updates. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.